is famous for the sun all year round. Now these years later, I'm surprised at all the rain that's falling down. It's so green out here, streams of water covering the streets. Now we've got to drive around all the holes in the ground. And if you still don't know which town I'm singing about, well, it's Windhoek, city where the sunlight awaits you. Nature just hates you all around Windhoek. Butterflies light up the sky like the stars do at night. Oh, all around Windhoek. When I'm walking in the town, I hear people asking where she coming from. With my necklace, I'm out and proud. I say I'm Ovambo. They don't believe me, think I'm crazy. I'm a tourist in this town. I don't care, no matter where you're from, you feel where you belong. And all my childhood memories, they lead me straight back to Windhoek, city where the sunlight awaits you. Nature just hates you all around Windhoek. Butterflies light up the sky like the stars do at night, all around Windhoek. Oh. It don't matter if you're Namadamara, German Afrikaner, Sun Bushman, or a colored one. Herero or Bamba or Bahima from Kauko, Twana, Caribbean, Kabango, Angolan, American, South African, Zimbabwean, coming from Congo, Spain, or the Netherlands. And if you're not listed in one of the above, you don't have to worry, just spread love. Windhoek, city where the sunlight awaits you. Nature just hates you. Windhoek, Windhoek, Windhoek,
Kwakuna hala, kubanga hala. Kwakuna hala, kubanga hala. Kwakuna hala, kubanga hala.
I believe in stand-up band.
It can be.
It can be.
We can make it happen. You can make it happen. We can make it happen. We're racing the bar. We're thinking forward and we're raising our people. Driven to win, being poetic, working in teams, serving the client. I believe in you and me. I believe in destiny. I believe in where we're going. I believe that it can be. I believe in you and me.
Partially it can be,
it can be,
cause we're driven to win.
driven to win.
I believe in all our hearts. I can change and build and grow. As a team, we're never apart. I believe in the African soul. This is the melody. This is the sound of integrity. We're working on everyone's dream. I said it again. We're driven to win.
I believe in you and me. I believe in destiny. I believe in where we're going. I believe that it can be. I believe in you and me. I believe in destiny. I believe in where we're going. I believe that it can be. That it can be. Dit kan wees met Standardbank. Ons bloed is blauw, behou die span gees. Dit kan wees met Standardbank. Ons bloed is blauw, behou die span gees.
Bankasa, Standard Bank, Kubura ikarengoso. Bankasa, Standard Bank, Kubura ikarengoso.
Om te kira, wadating omsna. Sadati, abote ikeira. Om da kira, wadating omsna. Sadati, abote ikeira. Kwakuna hala, kubanga hala. Kwakuna hala, kubanga hala. Kwakuna hala, kubanga hala. Kwakuna hala, kubanga hala.
We believe in our deepest promises, making possible our people's dreams. We believe in our Namibian soul, our focused minds, our human hearts. Standard Bank. It can be. Oh, Kahoo. It can be.
I believe in you and me. I believe in destiny. I believe in where we're going. I believe that it can be. I believe in you and me. I believe in destiny. I believe in where we're going. I believe that it can be. That it can be.
It can be. Pamoja Records.
Hi everybody and welcome to this 8th session of the Standard Bank Grow Your Business It Can Be online business talk. In the studio here with me, I have Michael Bronkhorst. He's the Manager Alternative Risk Division of Momentum Insurance. Milner Sibuleka, Assistant Portfolio Manager and Economist at First Capital Namibia. And then Felicia Uester, Manager of Enterprise Direct of Standard Bank. I'm your host for today and the Marketing Manager from the Namibia Economist. And warm welcome to all of you out there. I also just want to say to all our lady viewers out there, happy Women's Month. With all that said, before we start with our presentations, I just want to quickly recap on our competition and just to advise all our viewers of how the competition will work. For every session that we've had, Standard Bank has been so generous in giving us a prize for each webinar. It's only eligible to those viewers out there that have linked in live. And the link to the competition and the entry form is in the Discord chat room and also on the YouTube chat. You can access that link. There will be 3 questions, one from each presentation that you can answer. And all the correct entries will then be submitted into a draw, and the winner will then be announced at the next webinar. Now, our winner for our last webinar, I'll give that through to Felicia, and she can tell you all about that, what the prize was, and who was our winner from our July webinar. Thank you, Felicia.
Thank you so much, Desiree. Good afternoon, listeners, and kudos to all the ladies celebrating Women's Month in August. So our winner is Miss Marta Ngapundwa. For the last webinar, you have won a PayPal's voucher of 500 Namibian dollars. Our marketing team will be in contact with you within this week to claim your prize, and then the processes with regards to that. So thank you so much for participating, Martha. We hope that you will enjoy the funds coming your way, and it will enable you to spend a little bit on treats for your family. Thank you. Back to you.
Oh, well done, Martha. And Felicia, what will be the prize for this webinar, for those that are tuning in?
Yes. So the prize for this webinar is the same, a $500 PayPal's voucher that will be announced. The winner will be announced in our next webinar series. So please participate. It can just be you. Thank you. Back to you.
Thank you. So after each presentation, there will be a question, and I will also repeat it. It will be posted in the 2 chat rooms, and then there will be time after the presentation for a Q&A session, and I will then give you enough time to answer those questions. The competition form will also be live for about an hour afterwards, where you can still fill it in and then submit it. So from the competition on, we now want to start with our formal side of the presentations for today, and our topic is Achieve Your Goals, Grow Your Investments, and Protect Your Wealth Your Way. For last month, for August, we discussed Hire, Fire, and Inspire. And this was all about HR for SMEs, the impact of the COVID-19 and the growing mental health crisis. And specifically here we looked at how you prepare yourself and your staff for the impact that the COVID-19 has had on the mental side of people and on your emotional side. And also for you the importance of your HR systems within your business and how you should operate within the law and everything that you would need. We also had, courtesy from Sam, all those HR forms available. If there are any of you that still want to watch this, it is available on demand, and you can just ask me for the links, or you can go to the Economist YouTube channel and you will find all the videos there for you to watch on demand. Now for today, you know, when you're running your own business or a small business, obviously you're exposing yourself to a certain amount of risks. And you need to have safeguards in place should any problems occur. And it's not possible to avoid pitfalls and challenges. They will come your way in any case, but it can be mitigated. So with the proper precautions, planning, and insurance in place, you can be prepared for any eventuality. Now, with the pandemic, as we've all seen, and the subsequent lockdown, it has forced a lot of businesses to close down for certain amounts of time, and that have happened for the last 2 years, we know that, and a lot of businesses have actually closed down. And what we are trying to do here today is to try and give you the tools and ways how to mitigate this, apart from any other thing that could happen with your business, and especially from Michael's side, then to look at what you can put in place and plan for an eventuality like this lockdown. Now, the old adage is entirely true when it comes to risk mitigation, when you say that an ounce of prevention is worth a pound of cure. And with that, I want to give it over to Michael. And with that, I just want to say that he is the manager of Alternative Risk Transfer Division of Momentum Insurance. And he's a chartered accountant by profession. He entered insurance in 2013 as financial manager for Alexander Forbes Short-Term Insurance. 3 years later, he was transferred to Alternative Risk Division until the company was taken over by Momentum Insurance. Born and bred in Keetmanshoop, Michael is a true child of the South. After matric, he first read his BCom degree and then his BCom honors degree through UNISA, which he completed in 2011. He did his articles at Grant Thornton in Windhoek and qualified as Chartered Accountant 2013. So Michael, with that, I want to give over to you to discuss with us how you grow your investments and protect your business, your wealth specifically through these trying times. Thank you.
Thanks Desiree, and good afternoon to all the listeners. Yeah, so today I want to present a solution to you. So let's talk about protecting your wealth from a risk perspective and growing it, believe it or not. The purpose of any business is to generate income and wealth for all the stakeholders in the business, from the shareholders, owners, employees, to even the customers and the suppliers. So you will agree with me, there are an infinite number of risks in the world. I want to focus more on operational type risks today. Operational risk is a harsh reality that any business owner has to live with every day. Fortunately, the insurance market has made it easy to navigate and mitigate most of these risks. For example, you can take out fire cover to cover you in a case where the building of the business might burn down. You can take out cyber liability cover to protect you from a cyber attack. You can take out business interruption cover when there's a fire or flood situation which brings the business to a complete standstill or halt and you lose income. So the examples I can provide are as infinite as the risks that exist. One can almost take out insurance cover for any operational risk imaginable. The unfortunate part is that it is and can be very expensive. It doesn't have to be, and that is why I want to present to you today a tool, a universal tool. It's a worldwide concept, but it will assist you in navigating the risk environment a lot easier. The tool unfortunately involves adopting a saving culture, which is not that easy, especially in these difficult economic times. So I want to at least challenge each business owner out there to listen and try to adopt what I'm trying to message that I'm trying to bring home today. So in my profession and currently in the position that I hold, I've seen too many times where businesses plow back all their profits into expansion, whilst they're neglecting to put aside a small portion in creating a backup fund. An example that comes to mind, and I'm sure you'll all agree, is one of the tourism industry. I've seen many car hire companies putting in all their profits, plowing back all their profits into expanding their fleet, instead of building a small backup fund even on the one end. And I've seen a lot of those businesses fail because of the fact that there was no backup funding, because of the fact that they could not commit or fulfill their commitments towards the banks and to other creditors. So, as I say, I'm also an entrepreneur. I know I'm preaching to the converted here, and I also like to invest maximum back into my businesses. So I'm just as guilty as even the tourism industry. But yeah, I think, as they say, the reality is that if these trying times have taught us anything, it is to plan for the unforeseen as well, and not to just chase profits and growth. So yeah, having a backup fund protects wealth by not putting a business in a vulnerable position. And as I said, many businesses have failed in these trying times due to not being able to fulfill commitments to banks and due to not having any backup funds. So that is why in the short-term insurance space, we've created a product. It's called a contingency fund, or most people would know it as a self-insurance fund. And this fund enables a client to build a fund over a number of years to specifically assist the business against uninsured types of risks. For example, the COVID pandemic, to cover you against loss of income. And as I said, no one has foreseen or had foreseen this drought in the tourism industry. It was for sure very unforeseen. So if we come to the self-insurance concept, clients often ask me, so why should I take out a self-insurance policy as opposed to just making my own fund or putting my own funds away? And I've also very often seen that clients do not have the discipline to put funds away. If it's lying in a bank or account, it's just too easily accessible. It's within the eye the whole time. It's just too easy if a bargain comes by to buy it with specifically backup funds that are specifically meant to keep you from being in that situation where someone buys a bargain from you next month. So yeah, the product in itself is a very flexible product that we've developed. We expect a commitment from the client, but it's more a commitment towards themselves. It's not a commitment towards us, it's a commitment towards themselves to build their own fund. So a client would, for example, commit to pay 100,000 per month for a period of 12 months into a fund. And let's say in month 3, it's not possible for them to pay. They can just request a premium holiday. So the fund itself very flexible. The amount is what you are comfortable with and what you think might work for you. So you can start with an amount as small as 5,000 Namibian dollars per month. The idea is just to start creating a savings culture, promoting a culture where we don't live and spend everything that we earn. So the product is about you, for you. And as I say, you have to make the commitment towards yourself. There's also a lot of other benefits associated with the product. You get a tax deduction for all the funds that you put into the self-insurance fund, for all the premium that you pay in. But that's not what I want to focus on today. What I want to focus on is how the fund works, what it comprises, and what it can do for you. So the underlying instruments of a self-insurance fund mostly comprise money market type instruments. That means the funds are relatively available should a crisis occur. So typically within 48 hours it can be in your bank account. Then it also ensures that the capital are preserved, because this is a backup fund. You don't necessarily want to take risks on this fund. It's there for you, especially in these trying times or in a time of crisis. So in addition, what this fund does for you, in addition to catering for uninsured and unforeseen circumstances, is there's a lot of value add that this specific product and fund can bring to you. We can link this fund on to your conventional insurance policy. So what would basically happen is we have a team and a whole department in Momentum. It's called the Alternative Risk Transfer Division Department. We've specialized and we've done it now for a few clients, whereby we look at your entire portfolio. And then based on that, on your conventional portfolio, we can make certain recommendations. For example, a client can take out voluntary excess on their motor part of their conventional insurance, which in essence means that they're deferring some of the risk back to them. And that, in essence, means that the insurance company, the conventional insurance company, will give you discount because you're taking some of the risk back to you. So in a way, you can then save premiums because you've deferred risk back to you, and you can start building your fund even with those savings in premiums. So that's what we've done with clients in the past. I think there's a few principles in insurance that I just quickly wanna also tell you about. It's two key principles that insurance are built on. The one is that the premiums of the many pay for the claims of the few, So in essence, a good client pays for the claims of bad clients. Not necessarily always. I mean, a good client can also have a loss event. But we have in the insurance industry a term which we call multi-claimants. And that's the people that believe that they have to claim everything back which they pay in terms of insurance premiums. So insurers will start looking at you in a different way if you start deferring risks back to you. All of a sudden, you are a lower risk kind of client. All of a sudden, your loss ratio will be better. All of a sudden, you can look at even better and more discounted premiums and rates in the years to come. Then there's another term, and it's also common knowledge that all insurers in Namibia have to balance their loss ratio. Otherwise, they won't make a profit. So the magical number that always comes to mind, whether you're big or small in terms of the insurance world, in an insurance company, is a loss ratio of 65%, which means for every $100 of premium that you pay, the insurance company typically don't want to pay out claims of more than 65 Namibian dollars, because they also have to make a profit, they also have to pay salaries. And they price their premiums in such a way that they can achieve that 65% loss ratio. So the message that I want you to take home is that if you start taking insurance back into your own hands, you start controlling some of your risks better, which you know how to control better than an insurance company, there's actually a little bit of margin in for you, and with that also you can start building a fund. So in the department also we have other business opportunities. We have what we call cell captives. So for bigger companies, we have what we call a first-party cell captive. And the basis of a first-party cell captive is that if you have, let's say, a very big fleet of vehicles, you can insure it yourself on a first-party basis, and we just assist you with the claims part. Or we have what we call the third-party cell captive, and that's where the real opportunity lies. So if you're out there and you think you have a very good insurance product that you think could work in the insurance market, we've created a vehicle called a third-party cell captive, whereby you come to us, we look at the product. If we think it could work in the market, we help you to roll it out, and it's your product, and we just underwrite it for you on our license. If I may, one of our clients is fashion retail, or Fushini. They have a product on their cards, which you buy in store. The insurance is underwritten by us, and there's actually a few clients in that space that make a hefty profit. So there's also a big business opportunity here for someone that doesn't necessarily have the capital to start a business, to come to us, and we can help you develop it into the market. So in conclusion, what self-insurance is, it's a way for you to mitigate unforeseen operational risks, but in a sense by taking back some of the risk and managing it yourself. It's a way for you to protect your wealth whilst growing it, and that's what I think makes it so revolutionary. So if there are any questions, I think we'll take questions now, Desiree? Or?
Yes.
Okay.
Any questions from our viewers out there? I'm just waiting for questions to come in. And there was one that I just want to ask you. It's good and well to say to a SME, in rainy days, you need to make provision. As you know, you said you're an entrepreneur yourself, so it's not always easy or possible to cover all your bases. What do you think would be a priority area in terms of risk for any business, for small business?
So I think what would be a priority is to at least start somewhere. If we don't start somewhere, and it doesn't matter how small the amount is, but if you don't start, you'll never... I've had clients starting with 5,000 Namibian dollars a month that has a fund of 2 and 3 million today. And it's actually unbelievable. In these times, that fund has helped them immensely. So I would say just start somewhere. Yeah.
Okay, but that also brings me to the self-insurance fund that you're talking about. If I now can't pay 1 month, do I lose my contribution to my fund, or how does that work?
No, so we administer basically the fund on a system. The system is one of our sister companies from South Africa. It's quite a revolutionary system, if I can say that. It comes from a company in South Africa with the name of Guardrisk. I think their premiums last year was in excess of 13 billion South African rands. That specific insurance company. That's how revolutionary the product is in South Africa. That's how revolutionary the system is. And that system keeps track of your funds. So a client will come to us, he will take out a fund, make a commitment. It can range from a monthly commitment to an annual commitment. If you put in this year and you can't next year, it's not a problem. It's your fund, we administer it for you. There's an upfront management fee which we charge for setting up the fund and starting the fund. And after that, we don't charge any additional fees. So it's, as I say, quite a revolutionary. It's not like the old regime annuity type policies where if you can't make a contribution, you lose everything that you've put in. The nice part of it is it's your fund, we administer it for you, and you even earn interest at money market rates on your fund. Yeah.
Okay, that was the other question I wanted to ask you, is
Yeah.
the guaranteed growth,
Yes.
and will there be a cumulative?
So it's basically interest on interest. Interest calculated daily, compounded monthly on your fund,
Okay.
monthly on your fund. And the product itself, as I said, attracts money market interest rates because it's a money market type investment, basically arrangement that we have.
Okay, there was a question that asked, another question, the initial setup, is that, how do you calculate that? Is it a set fee, or does it depend on how much money you put in?
It depends on how much money you put in. So we have a sliding scale, depending on the size of the fund that you want to start with. Our maximum fee is 5%, and from there it slides down the bigger the amount. So it's not that there's a fixed setup fee. It's based on what you put in.
Is there a minimum amount that you need to pay into the account?
Yeah, as I said, our minimum, obviously there is some administrative costs, so our minimum is a commitment of at least 50,000 for the first year. So
For the first year?
Yeah, it roughly calculates to 4,800 per month.
Okay, so if you decide to, on a sliding scale, pay X amount
Yeah.
per month till you get to the 50,000, can you do that
Yes.
in advance?
Yeah, so you can build, and that's initially when we started with the product, they wanted bigger. The company, the directors, the board, they wanted to start with bigger amounts, and I said no. Your small client today is your big client tomorrow, and if we don't assist them, and if we don't help them to get this culture going, then we'll never get there. So,
Okay, that's wonderful.
So yeah, so that's why the product is really flexible, and it was specifically set up to work for the clients.
And for the SMEs.
Yeah.
Thank you so
Yeah.
much,
Yeah.
Michael. Okay, there's another question here. How is this different from a regular insurance policy?
So it is a short-term insurance policy, but it is a fund that we administer on your behalf. So all the premiums that you pay into this policy will be yours. And all the premiums that you would normally pay on a regular, or as we say, a conventional insurance policy, that would be the premiums of the insurer. So that would go into their pockets, whereas the self-insurance fund, that's your money. It goes into your pocket in the end.
Okay.
Yeah.
All right. It doesn't look like there's any other question, but I'm very pleased that you've tailor-made something specifically for the SMEs, especially if I start my business and I can't now afford insurance policies on anything. It's also some way of saving, putting that money away, like you said, and it's not in a savings account that you can quickly, okay, now I need an iPad for somebody, let me go and get that quickly.
Yes.
So
Yes.
all right.
Yeah.
Okay, that's great. Thank you. There are no more questions. I just want to remind our viewers out there for the competition. The question is, what makes the self-insurance model attractive for small businesses? Okay. There are options. It's like a monkey puzzle. You can go in on the competition form and answer the question. You can always come back to it later. We're now going to break for 5 minutes. This will give you time to do the competition, and we'll be back in 5 minutes. Thank you so much.
As a kid from the streets of Mondesa, it took one belief, one dream, and one seed of aspiration planted in the right mind. It takes hard work. It takes dedication. It takes commitment. It takes heart to never give up. It takes bravery to persevere. It can be difficult. It can be testing. It can be a long, winding road filled with ups and downs. But with everything that it is, with the right attitude, the right mindset, and belief, anything is possible.
If you believe, it can be.
How's it, boss? I'm good, boss, thank you. Select Pay Merchant, select Manual Entry, enter the merchant ID, select Payment Method, wallet or card, confirm and complete payment.
Hi, everybody. Welcome back, and I hope you completed the first question of that for the competition. Remember, you can win a 500 Namibia dollars PayPal's voucher from Standard Bank. We're now going to move on to our second presentation, and our topic is the benefits and opportunities of investing in commercial property. And Milner Sibuleka, Assistant Portfolio Manager and Economist at First Capital Namibia, is here with us. So should I buy or should I lease? It's the big question, and especially for SMEs and in this current environment. Now, Milner, after qualifying as an economist in 2009, he cut his professional teeth at the Namibian Economic Policy Research Unit before moving to First National Bank. This was followed by a position at the Ministry of Health and Social Services, where he was responsible for research and statistics. And in 2016, he joined First Capital. He has a master's degree in economic policy from the University of Zambia. He also holds industry certificates from the Institute of Bankers in South Africa, the University of Pretoria, and George Washington. So thank you, Milner, for being here with us today. And thank you. I'll give over to you. Thank you.
Thank you. Pleasure. Thank you, Tesre. And thank you. Good afternoon to all the viewers. My topic today, the housing market, is one of those the property market is one of those markets that are highly integrated to the economy. So in presenting the fundamentals of the property market, I'll give an overview of the economy so that we just appreciate why things are like the way they are in the property market. Just to begin with, today, Namibia Statistics Agency released the national accounts, the annual one, the one that we released before they were preliminary, and they revised the gross for 2020. They revised it downward to a contraction of 8.5%. And this is a gloomy picture. And taking a 4-year average over the past 4 years, netting out the 2020, which is like an outlier, would see that the economy contracted marginally by negative 1.5%, relative to the average of 5.4% pre-2016. And what we have seen as well, what we are observing is that aggregate demand and supply have been largely affected. Household disposable income have deteriorated over the years. And this means that the buying power of households have been severely affected. And this is also the case for the corporate sector. Their balance sheets have deteriorated with the cycle of the economy, which is in the downturn. And also final consumption expenditure, which is an indicator of demand, have contracted. In 2020, that have contracted by 7.2%, and again in the red of 1.4% over the past 3 years, compared to the pre-2017 outcome of precisely 8.9%. And with the property market, the information that we have, the statistics being released by FNB and some of the administrative records, does indicate that prices have been falling. Of course, it's another question as to how low can this price go. Since 2017, prices have been in the decline. And also, when we link this and make context of the property market, especially the commercial side, from the same national accounts, information shows that the property market is also largely affected. Gross fixed capital formation, which indicates a new stock of properties, in the market. Gross capital formation for buildings have contracted in 2020 for about by 6%, and the average over the past 4 years is 9% relative to 8% pre-2016. So that shows that we haven't had good supply of properties and in the market. And also the Bank of Namibia information on commercial mortgage credit, it shows that this line of credit have really contracted since 2017 relative to other credit lines. Yeah. So this as well gives an indication that we are under pressure in the property market. And I've just done an assessment. I've sampled some properties, commercial properties within the reach of Windhoek Commerce Region, and I've just looked at some key few indicators. One of them is the time it takes to go in the market, and I've engaged, including real estate agents and those that have participated, transacted, either they have sold or they have bought. And the indication that I got is that they are staying in the range of 28%, and some can even go in the range of 60%. 36 months. I mean, they stay about 28 months. Some can even go to 66 months without, before they find a buyer. And now, given this economic overview, we can now try to look at the property market outcomes and try to see whether, how does this economic picture influences investment decisions in the property market. And for one to make investment decisions, which largely is explained by, is largely explained by, the decision whether to buy or either to lease a property, is one have to really take a financial viewpoint in making such decisions than a very qualitative. It's more of a financial decision, kind of outcome when you look at the property market. And in looking at investment decisions in the property market, there are some variations, because here you are comparing, for example, a property that you have to buy, and when you buy that property, this is compared to the one that you are leasing, and there are some differences in regard to that, in a sense that, for example, the one that you are leasing, you are paying the installment, which is the rent. And at the end of the period, it might happen that or that contract can just be maybe 10 years. You might not go through. And that one who is buying could benefit to, equity beyond the payment period. Let me say if one have financed the purchase through a mortgage bond. And one have to standardize that, and there is a methodology that standardizes that comparison, which is net present value.
Yeah.
And this just literally compares the net cost today of leasing and buying. So you benchmark them, you standardize, and then those two outcomes, when compared, one can make a fair decision out of them. So with present value, you'll be able to make that decision from the cash flows that are made or that are arising from, acquiring or using this property in case of a lease agreement. For leasing a property, there are some assumptions I have made, which I took into consideration to model and come up with a net present value, a cost today that I could compare with a property that have to be bought. And the assumption I've taken here, I've first of all chosen one standard property specification or the size for both buy and sell. And lease, and this specification in terms of size, I came to an average of a property with the building size of 280 square meters and the earth size of 1.4 square meters. And on average, it came out that most of these contracts, they range between 5 to 10 years, and I have taken a 10-year lease as a demonstration to make this benchmark that can be compared on these, two different investment decisions. And the rate that I have assumed for this comparison is 9.5%. One can argue and say we are now sitting at much lower than that. And before or in times when the economy maybe start to pick up, we might go beyond that. So I just took an average, meaning that I'm using, the fixed interest methodology on this formula. And also the monthly payment every month, the annuity is about 33,000 Namibian dollars. That's a rental payment for these properties. And yeah, there are some other key considerations that I've taken care of in terms of tax benefit that accrue to leasing a property. And the same assumption were carried for when you are buying a property. And it came out that this size of property ranges in, you find them in the range, they go in the market in the range of 3.8 million. And I've made an assumption that when you are buying, you are financing your decision with a mortgage, finance. You are borrowing from a bank at a rate of 9.5%. And again, here the repayment is 10 years, just to standardize with a lease agreement. And the installment is 44.7%. That was derived using, some methodological approach, accounting standards. Yeah, and also here I've made other consideration assumptions. For example, one would argue, say, when you make comparison, for example, the one who is buying could benefit from, a capital appreciation.
Yes.
There would be value after that will be, in terms of equity,
Yes.
that will be increasing as you reduce your loan amount. And that value is highly influenced by the inflation rate,
Yes.
headline inflation rate. And I've made the assumption that there should be capital appreciation on a yearly basis. I try to be a little bit more conservative. Conservative use, taking into consideration the current, outcomes.
Yeah.
Currently now the housing market is trending lower, far lower than the headline inflation. And I've assumed that capital appreciation is at a rate of inflation rate less 100 basis points. That's a conservative. And then I did the background calculations, and I came to a comparison that shows that it's in the accounting language, they say the cost today of buying a property, which is net present value, is less than the cost today of making a decision to lease on the same specification for 10 years, same assumptions. And from this, of course, the differences were not so much, very much marginal. It was 2.3 and 2.45 million comparison. And this brings us to the conclusion, using this sample that I've taken, that it largely remains relevant to buy a property relative to leasing. However, this finding, I've taken just a sample. I try to be very much
conservative.
Yes, and realistic to use a sample than just a theoretical, framework. And it's not a larger sample, so anyone, circumstances can be very much different. That could maybe, derive to a different conclusion, but largely from this sample that I've taken in Windhoek, it showed that buying was better off compared to leasing. And in terms of looking at these decisions, there are other considerations, however, that could, this finding is not binding, cannot be inferred to even to Windhoek, to the whole property market or commercial property market for some reasons, and it cannot hold even for some time, given that, the outcomes of properties in various geographic locations can differ and can be very much divergent in terms of given the factors that drives the property market in those geographic areas. And also, over time, this interpretation could change. If, let me say, there were economic or policy outcome changes, it could change. We have just seen that, capital appreciation, which is taken into consideration when making these decisions, is influenced by the inflation rate. And we have the cost of borrowing. Again, those are outcomes that are influenced by economic outcomes. And also, conditions of lease of agreement can sometimes influence the outcomes, and also the products, the financing products from the banks, or the conditions of those loans, and also the flexibility, during market changes. You'll find that, for example, if you have your own property, when the economy goes in a recession, you could find your feet, down by maybe leasing part of that property.
Yeah.
But if you are in a contract, if you are locked in a contract, you are comparing to someone who is locked in a contract. A 10-year contract is not your property. You can just lease it out, and you need to stay in that contract even if you are not making any profit. Yes, so in a broader scope, buying still remains relevant compared to leasing, but however, that interpretation can be influenced by those outcomes that I've said.
Yeah,
so
most definitely.
Circumstances are different. Thank you.
Thank you, Milner. We're busy with these heavy topics about insurance and property, big decisions that entrepreneurs have to make. When I was driving here, one of the buildings, somebody put a banner outside. The owner of this property doesn't want to negotiate on rent, and it's standing empty. So that's one way of trying to force your property owner to come down with his rent. But I suggest that might not be the way to go. You need to negotiate. But at least if you own the property, then you can lease some of it to someone else.
Yeah.
So you can scale down and lease it out. So thank you so much, Milner, for that. Now, while we're waiting for some questions to come in, I just want to ask you, why do you deem the commercial property market so important as an indicator of the health of the rest of the economy?
Yes, the commercial property market.
Yeah.
These are investments that are made by commercial entities, which are major players in the economy.
Yeah.
And making investment in these properties influences, the production capacity of the economy. And also, even if we look it from the other angle of the financial sector, the scale of commercial entities, in participating in the mortgage, in the lending, space in terms of borrowing to finance these transactions, does tell a lot as far as how healthy the economy is. So this is very much important, not only to show where the market is going, the housing market, but it's also a good indicator for the economy in general.
Yeah, okay. So at which point would you advise small business owners to consider investing in their own property?
Of course, in investment, it's always best to invest when the trend is very low. We are in a trough, because that's where things are easy, and price are lower. But as I've indicated, circumstances can be very different. What I would advise is to take a very, measurable framework that one can sit and try to be very much explicit in terms of, the assumptions that you need to consider in your model,
Yeah.
And one have to make that quantitative analysis to come to that conclusion. And there could be other qualitative, outcomes that could influence. For example, maybe, choice or maybe preference and so forth.
Yeah.
But one should, in as much as possible, try to model those outcomes and quantify the benefit so that you have a fair comparison.
Yeah, well, obviously, if you can afford it now with the prices being low, interest rates are low, and you can invest, and you have the money to invest.
Precisely.
That would be one way of saving towards your own company and your own future. I mean, when we started Economist years ago, when we bought our property, it was one of the best decisions that we made, because now, if I look at what we have, we would never been able to afford it or buy it right now or do it. But I mean, once you take that step, it's always difficult to get into the market. I mean, I think that's even for my children, when I tell them you've got to buy some property, you've got to live somewhere, you buy your own property instead of leasing or renting a place. They say, yeah, but it's so much money, I can pay less if I rent. But you're saving towards your own future if you do that. So yes. There's another question. What is your take on the current state of the property market?
Current state of the property market. Of course, all indications are showing that the property markets is also in the cycle of the economy, and we have seen a trend that matches that of the economy that started since 2017, and we have been there for some time. Our house view at First Capital Research Desk, we are of the opinion that the previous fundamentals in the property markets were largely driven by factors that are outside the scope of, the demand and supply in the country. So largely we know that, Angola was also a key factor. Yes. And there was speculation. So when you have all those conditions, you find that, it doesn't follow the normal trend. So, and given that, speculation is out of the picture, and we do not have that strong demand coming from, foreign nationals, now you are left with Namibians, and that demand cannot replace the previous outcome. So that's why we are seeing this trend in the housing market. And we are of the opinion that maybe in the next 2 years, 3 years, we are projecting that thereafter this cycle could end, and the housing market, just like in any other country, could start to track the economic cycles, the economic growth. So it could start to track. So those all those noise that were created from that excessive demand due to speculation and foreign nationals seeing an opportunity here could now normalize, and then the housing market could start tracking the local economic outcomes.
Okay, there is a question here from Christian. Considering the current work from home that many companies have now adopted, do you think that investment in commercial property is still feasible?
Yes, that's a demand side, effect, and I think especially the commercial property market.
Yes.
I mean, largely, it's very common that they should be affected, because in terms of space that's available, if people are operating from home, they'll be managing properties with empty spaces, and with time, some of those commercial entities could, give up on these properties could opt maybe for smaller properties,
entities, yes.
and that affects demand. And largely, that just adds a layer on already what's happening in the commercial property market. When you look at all the credit lines, the information that comes from Bank of Namibia, you'll find that commercial mortgage credit have been really very much under pressure compared to other credit line, even for household.
Yes.
Mortgage credit. That have been growing in the margin. I think now it should be in the margin of 4 year-on-year. But the commercial one is in the red. Our interpretation to that is that investors in the property market, they are no longer seeing value. Perhaps, of course, there's no demand given this COVID, and also I've presented a picture that shows that there isn't demand in the economy, and with less demand, companies, the business sector will be largely affected. Balance sheets will start to deteriorate, and that speaks well to these outcomes that we are seeing, that there is less investment, and I've just shown information of gross fixed capital formation. And so it just shows that that sector is in the red. But however, we are of the opinion that there is something happening. It could be a decision point where commercial entities are trying to adjust their decisions or their priorities. They could be building their balance sheets, or they could be building, their businesses, trying to prepare, post-COVID, because what we are seeing from the commercial entity of the economy is that they are borrowing. They are continuing to borrow for other purposes other than mortgage, financing. Okay. Meaning that, they are borrowing for operations. That area is very strong, and it has been compensating. The commercial mortgage credit have been going down, that have been going up, and that shows that they are borrowing to expand their operation, to expand their production capacity, which is good. They are seeing, they are seeing an opportunity in the future that the economy will going to come back to normal, and they can counter that.
Yeah, or they just need to reinvent their spaces on how they use it. And that's an opportunity. Okay, and now there's another question. Sorry. Does Standard Bank have repro properties on offer? If so, how does one get to know about them, Felicia? I think that one is for you.
So we do not advertise them. They go through the auction process. So if you are interested, you would get those at the auctioneers in terms of the lists that are available on a month-to-month basis. But we will then, maybe afterwards, I'll just share with you the names of those auctioneers that is contracted with us in terms of these. And then we can just share it in the Discord chat as well.
There's another question for Milner. What is the impact of maintenance and insurance on the value of a property?
Come again?
Maintenance and insurance on the value of the property. What is the impact?
Okay.
You're getting a lot of technical questions.
Yes. Maintenance of a property, of course, it carries benefit because it adds to value of the property.
Yeah.
And insurance, it's kind of like a security to hedge towards, risk. So it can as well be very much imperative. It depends what type of insurance is this. Where we are now, given the picture that I've just painted, it should be obvious that, much of these properties are being repossessed, or they cannot be, they cannot manage to have these properties on their balance sheet, some of the commercial entities. And, having the right products that hedge towards such kind of risk is always imperative. and adding value to the property
Yes, of
is
course.
always best.
Yeah. Yeah, to have your property in pristine condition, it's like your car. If you want to
Yes.
resell, you have to, maintain it. All right. That is that for the second presentation. We're now going to break for 5 minutes. But before we do that, I just want to quickly give you the question. Where are we? What is the financial signal to buy a property? What is the financial signal to buy a property? That's your second question on the questionnaire. So please fill it in, and we'll be back with you in 5 minutes. Thank you so much.
For 1 in every 5 underprivileged Namibians, only a handful are likely to reach their dreams. And for the Buy a Brick initiative, the hope of enhancing the reality of those dreamers has come to light.
Where we were staying before, there's no electricity. When I'm comparing the life where I was living before and where I am now, I can just cook anytime I feel like. Morning time when I wake up, everything to me is available. Water, electricity, I can do everything when I'm preparing my cup of coffee, just to switch on the kettle, when I'm just take shower and go for my training. I'm really happy when I'm just wake up and then I'm next to my house. It's really make my life to move forward.
Giving a positive outlook on Namibian lives has never been more possible. With Standard Bank, it can be. To contribute to this initiative, purchase a pair of Buy a Brick footprint socks for only 100 Namibian dollars. Help make a shack-free Namibia possible.
Papa, I know what I want to be when I grow up.
Wow, really? What is that, my baby?
I want to be president of the whole world.
Okay, my baby, I hear you. But come over here, let me explain something to you. You see, it's very tough being a president, so you'll have to study very hard. Are you up to it?
Oh man, I got this.
Okay, if you're serious, then we have to start saving for your future. But I know what we're going to do. We will open a DG Youth account at Standard Bank. We are going to start saving for your future already. I know what we are going to do. Or what do you say, Madam President?
Thank you, Daddy.
Hi, everybody, and welcome back. Remember to answer that second question. You can win a $500 PayPal voucher from Standard Bank. We're now moving over to our third presentation from Felicia Ewister. She's the Manager of Enterprise Direct at Standard Bank, and she directs a team of business bankers tasked to bring SME customers into the digital fold, servicing them via email, telephone, and SMS. She sees her current position as another step in following a passion to develop leadership and growing the Namibian entrepreneur. So thank you, Felicia.
Thank you so
Over
much,
to you.
Days. Thank you so much for dialing in and listening to us today. It's quite heavy topics that we're covering, and I'll try my best to keep it light and not dive in too deep from a bank's perspective. So from our perspective, if we look at what we're covering today, is the 4 different pillars is very important for any small medium enterprise in terms of create and build, live and enjoy, share and legacy, and then save and invest. So if we look at create and build, you should ask yourself, what do you want to invest in? What are you comfortable in investing in? And then study the subject matter. So if we look at create and build, the options that you have in order to build and either create this portfolio of yours as a business entrepreneur, in terms of leaving a legacy and investing, and also making sure, as our presenters today alluded to the risk appetite for your business, to mitigate those risks, whether it is from an insurance perspective, whether it is an acquisition perspective, and to grow your business, not just from a cash environment, but also looking at other means to acquire this wealth. So if we look at create and build, then there's options of a foreign currency account if you are in trading in terms of your business, expanding your business. I do believe a couple of sessions ago we touched on e-commerce. So this would be, if you are into that, then this would be the option for you to start looking at for a foreign currency account. And then secondly is trade. So why do we say trade? Because trade, immediately if you go into trade and export for your product or your produce, it enlarges your territory of where you can go, and also the quantities that you can produce if the demand is for that product that you are creating or alternatively producing. So we've come across that there's a new tendency in the marketplace where customers who qualify for lending and financing would actually take portions of that lending and financing and invest it in a little bit of a high-risk environment or medium to high-risk environments just to create wealth. This is not obviously something that we advocate for, but it is just a smart way for a small entrepreneur to create wealth in a very short period of time. Then a second item is offshore banking. This is also more for the entrepreneur that is investing in trade items. So we have customers of ours saying that we are affiliated with the ICBC Bank, Bank of China, that also uses this leverage because we negotiate the rates for NIMBY accounts on the other side and offshore, that they can do investments as such as well. It's just to diversify the portfolio and to help the customer create that wealth which they would want to use as legacy or alternatively expanding their businesses. Then if we look at live and enjoy, so obviously when you start and you think about creating wealth, live and enjoy is, I think it's one of the things that all of us would want to do, is you would want to live your life to the fullest and enjoy your wealth, somewhat, but obviously with the relevant measures in place. So it's important, if you do want to harness this part of the wealth in your business or in your lifestyle, that you look at setting goals and targets. So for instance, myself personally, I set every year, I would sit down and set goals and targets for myself in terms of where I would want to go next. So where would I want to go visit, and then with that, what would it cost me? So and then I break it down, okay, so how long do I have until I can go? And then I would then work my own investment plan until such time that I can go. So I have family in South Africa, so this is something that I would like to do, obviously annually, but COVID came and we decided no. So if you look at commit to share a percentage of your income, it's something that we've shared also a couple of webinars back, where we said that when you are an entrepreneur, when you make that profit, remember the profit is not the turnover is not the profit. Turnover is what income you get into your account and what income you get into your business. But that necessarily doesn't mean that that is the money that you have free to spend, because you first need to settle all your commitments, and only thereafter, that profit then you can divide and make a commitment to yourself, your family, your employees of your business, that this is the portion that we will set aside every year as savings. So we've seen quite interesting types of savings, where some of the small businesses would commit to such a percentage, and then by January, which nobody has money in January, right? Then that percentage would pay out to the employees as a beginning of the year type of thing. But everybody commits in that business towards, I will take even from my bonus, and I will put that 5%, 2% aside, and the company helps them to do that for them, so that by January you don't find yourself with, just an onion, a half a piece of bread, and a skinless chicken in your in your fridge, and then you have to commit to school runs. You have to commit to a lot of things, and I do believe that planning and in these things is very important. Then, for those that has started the journey of investing and are now with a COVID impact, with interest rates falling and all these things, this is where, as a bank, we come in and we give financial advice as well, to say, okay, maybe you should move a little bit of the things over here because this one is performing a little bit better, and maybe you should move a couple of the things there, or maybe you should settle this debt because it's eating away at your profit margin, or alternatively your wealth. So then we do have financial advisors that also go out to you, or alternatively, we nowadays also accommodate virtual engagements if you don't want us to, face-to-face do that for you. Then if we look at share and legacy, I think this is the one that speaks to me the most. What legacy do you want to leave behind in the business that you are currently operating in? Do you want to scale? What do you want to grow? Do you want to have a legacy of such that your family members can take over, your children, your next of kin, whoever they might be? And if you have that, when do you start the shareholding conversation with your next of kin? And legacy doesn't necessarily always mean money and cash. It can also be property, where you acquire a number of properties and then you say, okay, son A, okay, this is in the dream world I live in, right? The son A, you get property A, and son B, you get property B, or so on. That is also part of legacy that you can think about. And then obviously cash is still king in Africa in very much of what we do. But even under cash, you have now a variance of what that cash looks like. We have things like cryptocurrency. We have things like Starbucks and e-bucks and all these things. And we have wallets where you can save, and pockets that you can save. And I like the presentation from Michael, where he mentioned in terms of self-investment as well as an option. So cash can be seen in different ways. It definitely no longer is a check, because checks don't exist with us anymore. It's not a draft. Drafts don't exist. A draft is the foreign check that you would have received in the olden days, many moons ago. But those are things that we don't look at. And cash can also be shares. Shareholding in Standard Bank, for those of you that bought shares, that is also cash, because it can be converted within 48 hours into cash. So, and then one of the things is also, in terms of share and legacy, is skill. So what type of skill that is unique to your business are you transferring either to the person that's taking over your business in terms of succession planning, or alternatively your next of kin? There's a certain skill that you use. I've met a older gentleman in the northern region that is, his basic skill is to make the best that I've ever seen walking sticks. And he actually gets orders from international world leaders, to say the least, to make that specific walking stick. And that skill is something that he refuses to share with anyone except his sons. So that unique skill and art of you perfecting whatever you produce or whatever your output is as an entrepreneur, that is also something as a legacy that you can think about of sharing. So then obviously the next generation, what is that next generation? So I always have tough conversations with my 14-year-old son about, mommy, please just, wake up. This is what the technology is doing for you. Why are you doing it yourself? So the next generation and that legacy that you would want to pass over, where do you marry with what does robotics, artificial intelligence already do for you, and perfecting the art of that, handing over to the next generation, just taking that cognizance also into play. Then the last item is obviously save and invest. I do believe the two gentlemen has broadly explained what the opportunities are. But one of the things that I also just want to bring to your attention is, whenever we engage our customers nowadays in terms of investment advice, we would also have the conversation of diversifying your investment. That you don't have all your eggs in one basket, but rather diversify, but not diversify in such a way that it's so widely spread that it's difficult for you to control or take tabs on it. And then the other part is, savings can also be to educate yourself or educate your staff that work with you. So to invest in educating your staff that works for you can just be the savings that your business needs to survive all the pitfalls that we are going through currently. So moving on to what do we have to offer in currently. So I've put up the fixed deposits. So this is where you now decide what is the term and what's the reason that you would want to invest. So we have fixed deposits, we have our premium call, which has a special interest rate. This is specifically for businesses. And then we have the notice deposit that you have for the various terms, obviously 7 days, 14 days, 21 days, and 32 days. So we've seen that the 21-day one has become a little bit, the uptake is a little bit more, because people are now saving to buy groceries for the next month. Can you believe it? That has become the new trend. And also some of the smaller businesses that is in contracting, or what we would say contractual type of businesses, where you get a contract, you complete it, and then it's done. In some arenas, that you would know them as tenderpreneurs, where they tender, they would get the contract or the tender, and that for that term. So what is interesting in that arena is they also use the notice deposit for where they put what we call the fortnight pay aside, so that they don't find themselves in a cash flush situation by the time that their employees might ask, because things are just difficult now. So from us as Standard Bank, if you have a current account with us as a business, we just want to confirm again and just share that you are automatically covered for these things. So we cover you up to the value of 50,000 for accidental death and permanent disability. We cover you for temporary disability for $1,500 per week. And then also the medical aid expenses to the value of 15,000 for the sum insured. So that is what you have as cover as a Standard Bank business banking customer. So that's all from my side today. I decided to keep it short and allow maybe a couple of questions for today.
Yeah, thank you, Felicia. I think, you know, when I was young, everybody said, you must save. And we said, oh, no, there's enough time to save. But now it's too late for most people. So, yeah, it's very difficult. I just want to ask you, how flexible is Income Protect? Is it a one-size-fit-all, or can it be stretched to suit each individual client's needs?
It can be tailor-made to that specific customer's needs, because I do believe that we tailor-make it specifically for our farmers, where they it depends on the herd that they have. It depends on, say for instance, the farmer would be into herd production. Then they offset only at auctions, and it's only then that they get income. Then we would align the repay or the payments towards that in terms of that cycle of that farmer. If it is into crop farming, we would understand and would want to know when does the crop harvest and when can he market or go to market. So some market themselves, others go and they sell to bigger wholesalers that then would off-market. So some would off-sell to, like, for instance, to city produce, and they would process on-sell, but then they get their money immediately. So if we understand that cycle, then we would align to that cycle. So some of them would also say to us, okay, when I off-sell, you cover me for the next let's say for the next 12 months. Say, for instance, they only off-sell once a year, then we would cover them then with that money that they get. Then they are covered for the next year, for instance, so on. So we tailor-make it according to what their needs are. Okay,
that's great. So, but when the economy is healthy and grows rapidly, your mantra is borrow, borrow, borrow. But for the past couple of years, however, it's just been save, save, save. So this drastic change in sentiment. So explain that a bit.
So in terms of a bank, so let's talk about the existence of a bank. A bank exists primarily to take deposits, hold the deposits, and secondary to lend on. So if there's nothing to hold on to, there's nothing to borrow out to. And obviously we are regulated very harshly in terms of what that ratio should be, that you cannot lend out what you don't have. So the savings part is to also, us as a country, we are very lucky we don't have so many banks as the other countries that needs to manage this at a larger scale. But the fact that we are actually lesser commercial banks, it's easier for our country to make shifts quite fast in terms of what the impact is to market. That is why we have gone out with all these schemes where we are partnering with the likes of the UNDP, the likes of Development Bank, together with the government, to say that this is not the play field for a commercial bank, but we would want to solve for this. So how do we go about solving for this? Let's partner. And that's why we've brought out all these schemes. So we have the UNDP one, we have the Credit Guarantee Scheme one, and then we've partnered actually with Bank of Namibia from a government perspective to roll out the zero rise, or not zero rise, let's not say that, the prime lending rated lending specifically for SMEs. But what we've seen is we've gone out and done all these solutions, but the uptake is very poor. There is a constraint from the entrepreneurs to say, look, we first want to see where this is going. Just keep it on ice. We've had a couple of those conversations where they are really not wanting to borrow at this juncture. And then the secondary part is the ability to borrow and repay. So even if I'm giving you this lending or this loan, will you even be able to do what you want to do, save your business and repay me? And most can't, where they are just so cash flushed, or alternatively they are having quite significant credit bureau negative and adverse ratings that we cannot borrow to them. And unfortunately, the law of the land is you need to take that into consideration. So until such time that we revisit that law, we are very constrained, although we have received quite a number of, let's say, influx of funds to be able to borrow and to lend to SMEs, to corporates as well. But the biggest constraint is that we are found in a situation as a country that people are thinking twice before they borrow, or alternatively, those that do want to borrow are already, I think we took too long to go to market with a solution. And in the interim, the dip went too low for many of the businesses that were already just, they were still in start phase, as we can say it.
Okay.
It wasn't cemented really so fast, And what we also see in the SME market, sorry to linger now, but is that our cycle of businesses starting up and closing down, cycling up and closing down, that cycle is very short. And resultantly, we find ourselves that businesses struggle to move from small to medium and then grow to corporate. Not all, definitely there's huge success stories of ones that was actually micro SME. Within a couple of months they became corporates because of smart thinking, smart partnerships, and also listening to the coaching and mentoring advice that we try to give. So yeah, there is quite a vast variety of situations currently, but I don't believe that the banks are at this juncture saying, no, we don't want to give lending, but rather finding it difficult to give within the parameters that we are currently facing.
Okay. There's a question here from Christian again. Waar's die ding nou? Just get it. Can a business or individual buy shares in global companies using Standard Bank as their portfolio manager?
Well, if the business advertises, we can facilitate. This is being done, but then it is, we do what we call back-to-back guarantees by bank and back-to-back letters of credit, where you definitely have to go through a credit check before we, vouch for you to say that we can do this on your behalf. So there is a rigorous credit check that you undergo.
Okay. All right. Then there's just comments saying very informative. They enjoyed it a lot. Thank you from the viewers. I think that's our questions for today.
Yes.
I just want to see. Okay, no, there's just another. Thank you. Thank you from Alistair and all our viewers. Thank you for your comments.
Yes.
Remember the third question for the competition. Let me just read it to you quickly. What is the maximum notice period on a notice deposit account? So, maximum notice period on a notice deposit account. So I hope you paid attention and listened to Felicia. That's your third question. The competition will be open for another hour, and you can complete that. We've come to the end of our presentations for today, so I just want to wrap up and say thank you so much to our presenters here today. Thank you for your time, your expertise, your willingness to be here and share with all our viewers. And all the viewers out there, thank you for joining in and listening to all the different webinars that we've brought you. This was the 8th. We've got 2 more to go to get to the end of the series. And I think for a small business out there, it's imperative that you mitigate the problems and the challenges that will come your way, as we've heard today. I think it's very important. And actually just put together a dream team of people that will advise you. I think for any small business, that will be the smart thing to do. Have your advisors, and we've actually covered most of these topics. Your accountant, we've done the accounting part, your insurance broker, and your banker, which we've brought to you. And then obviously for our next presentation of webinar will be about speak to my lawyer. So that is the last part of your dream team is your attorney. And obviously the whole thing is to not get to the point where you need an attorney because that's very expensive, but that you have everything in place to make it possible for you to drive and run your business within the correct parameters on all levels. So we'll see you in September for the 9th topic, which will be Speak to My Lawyer. And thank you again to our presenters. Thank you so much. You've done a brilliant job. And last but not least, your competition. Thank you for Standard Bank, the nice prizes that you've given for each webinar. We will have an overall winner announced after the series is done. So Standard Bank still need to announce that prize. And I want to thank all the technical people for everything that you've done. Thank you, Brian, for your hard work and keeping us alive and sound well. Thank you so much. And with that, I want to say, stay safe, healthy, and best wishes. And we'll see you next month. Thank you.
Here comes the night, we're gonna lose the light. Summer night and the time is right for the night light. There goes the day, giving way to the smile. Summer breeze and the time is right for the nightlife. I remember what the day did to me. I bear my scars to the moonlight. I walk it off, I shake it off when the night comes. 'Cause I belong to the night and I feel more alive with these night vibes. Just give me the night. Give me the night. Give me the night. Let me hide from the light. Give me the night. Just give me the night. Give me the night. Let me hide from the lights. Hiti piti mbene kapiti rambena slice ambene kanoka nambene tatu nambena.